Treasury Secretary Scott Bessent stated that there is currently no guarantee that a recession will not occur in the U.S. However, he could not rule out the possibility of a financial crisis. What is DBS response to the U.S. Treasury Secretary's statement?
I think that's a good question. A lot of people have asked this question to me. I think as I mentioned earlier, if you see what Fed commented at its monetary policy meeting last week, they did say they're seeing upside risk to inflation, downside risk to growth. So Fed is also acknowledging that yes, tariffs will have that kind of a risk to the economy. Clearly, this risk is not just restricted to. We were initially thinking that it's going to be impacting the rest of the world, but it's impacting the US as well. And I think if you look at the Treasury Secretary's comments, I think those are quite factual, I would say. What he's trying to highlight here is that yes, there will be a short-term pain, and short-term pain while they're trying to get investments back into the country, they're trying to get manufacturing into the country. But for that, they will have to use tariff as one of the measures. And as a result of that, there could be a long-term structural gain. So I won't read too much into it. I think it's quite factual. But the good thing is that I think Fed also pushed back the recession narrative. And they have acknowledged that, yes, they will be an impact to the economic growth. Yeah.
Okay, Puneet, last week we saw the IDX composite decline by as much as 6%, and stock trading was temporarily halted by the Indonesia Stock Exchange. Amid the ongoing volatility, what is DBS outlook and foreign and domestic investor demand for other investment assets in Indonesia?
Great question. I think before I answer specifically for Indonesia, maybe if you look at the region, if you look at ASEAN and South Asia, you'll notice that the stock markets, whether it's in Thailand, Malaysia, Philippines, India till a couple of days ago, they all were down. Also, if you look at it from the last 4-5 months perspective, when Trump came into power, or Trump won the elections, we did see that there was outflow of capital from Asia. That was a time where actually, if you look at just the forex reserves from September peak for India and China, from those levels, I think the forex reserves have dropped for China for roughly about 90 billion. For India, it's roughly about 50 billion. Compared to that, if you look at Indonesia, we've been fairly stable. In fact, it's actually gone up. So I would say that, I think the markets have responded to basically, Trump coming in and his policies. Also, there is a bit of concern on the economic growth. So all organizations are revising down the global economic growth. So the way I see it is Indonesia is no exception to that. What happened is that it just got amplified for Indonesia because of few concerns. One, our tax numbers for the first 2 months of the year came in much weaker than the 2024's. And then on top of it, there were concerns that maybe the fiscal deficit might widen.
So other policies, maybe.
And the policies, and then concerns around maybe the cabinet reshuffle, Danantara. But I think a lot of those clarifications have come out. So that has been the reaction. Because of that, the nervous offshore investors probably got spooked, and we saw a knee-jerk reaction there. But if you ask me from a valuation point of view, I think the valuations look good. On the Indo government bonds, as I just said earlier,
to worry.
Yeah, I think Indonesian government bonds, I think the yields look pretty attractive. 720, 725 has been the level on the 10-year where we've seen even the last 3 years, we've seen that level being touched, and then we've seen a sharp retracement. So I feel that I think Indonesian government bonds look attractive. From a currency point of view, again, the currency has weakened quite a bit. I think again makes it attractive for the offshore investors to bring in money. And from a stock market point of view, again, I think there are a lot of undemanding valuations, and I think it's an opportunity time for investors to go into the market. So I'm optimistic. I think we just need to ensure that the narrative is clear and well coordinated, which goes out from the country to the offshore players. Yeah.
Okay, so in times of high market volatility, what strategies does DBS employ to assist clients in managing their investment portfolios?
See, for us, the first and foremost thing when it comes to advisory is to understand, the client's financial needs. So the advisors will be doing a thorough financial need analysis, understanding what's the investment objective of the client, also to understand, what is their risk appetite, and then kind of recommending a an investment strategy which is well diversified. And I say well diversified, it's basically to ensure that if one asset class is not doing well, there's another asset class which is firing up. If you look at the current market where equities were underperforming, the recommendations were more around government bonds where the yields were pretty attractive. So also then switching between whether it's IDR government bonds versus dollar government bonds, depending on how the currency levels are, is what the bank would be advising the customers. Other than that, I just say that I think clients at this time have to take a slightly medium to long-term view. Short-term would turn out to be more like a tactical trading approach, and from the advisory side, there is continuous color given to the clients on what's happening in the market, how is the movement in the market, the outlook going to impact their portfolios, and what can they do around that. Yeah.
Okay, so what effort is DBS making to provide clients with fast and practical portfolio management solution through the digital platforms it operates?
See, as you all know, DBS Group has won multiple digital banking awards globally. So for us, providing our services, products using digital channels is a core strategy for us. But if it's institutional banking, we have applications like Ideal for institutional banking customers. If it is consumer bank, it's a DigiBank. We also use APIs. We have over 500 APIs to provide banking services to sophisticated clients. These are basically our system speaking to their system through APIs. Specifically on consumer bank, we have this digital bank, DigiBank app. And this app is basically developed keeping clients in mind so that they can transact multiple asset classes through their mobile application, be it bonds, funds, FX, deposits, etc. And the app is continuously evolving based on the feedback that we get from customers, based on what we see happening, developments happening in the market, and supported by a big tech support team. And the physical piece doesn't go away, So you've got research, you've got investment advisors who are continuously advising the customer. So it's basically I would say it's two in a box kind of an approach. Yeah.
Okay, so what standard does DBS set to ensure the delivery of quality investment and fund management service to its clients?
Same, I think, Shinta, as I mentioned earlier, I think what we try to do is look at basically the client's needs. Once we know what the client's investment objectives are, what their risk appetite is, then basis that, they try to curate an investment strategy for the client. And then basically, then it's a continuous update to these customers. Market's been very volatile, outlooks are changing. So based on that, what can they do? So it's a constant rebalancing of their portfolio, which the investment advisor do, along with the product team and a massive research team that we have here.
Okay, so the year 2025 is still a long way to go. Mm-hmm. But for the remainder of the year, what key aspects should we closely monitor both internationally and externally? And additionally, what are DBS expectations for Indonesian economy and the investment climate in the portfolio market?
I think for the rest of the year, when I look at the global markets, for me, it's going to be basically the geopolitical risk that has to be monitored. Middle East is something that needs to be monitored. Situations should not flare up there. Ukraine, Russia, while we are seeing that they are heading towards a path of truce, but then what's going to be the impact? Impact to supply chains, what's going to be the impact to oil? Because Mark is talking about huge supply of oil coming in, Russian oil coming in. So all those things have to be monitored. Specifically, as US is concerned, I think we do need to see, are there any further punitive actions on the tariff side that the Trump administration is going to take? So that's critical, and its impact to US inflation, and as a result, to dollar index, to interest rates. Specifically, Indonesia, I think again, these external things do have an impact. I mean, while we are still largely a domestic driven economy, but for us, again, we need to watch these developments. Other than that, I think what's important is to see that how is the dollar rupiah behaving because of what's happening to the dollar index and the interest rates offshore. And I would say that, I think for us, it's also important to see On the fiscal deficit side, we don't have a slippage. We continue to hear from the government their plans on how they plan to shore up their revenues and what measures are taking on the spending side. But more importantly, I think this stage, I think markets looking for probably a more coordinated and clear narrative from the government. So I think if that happens, I'm extremely optimistic on the markets. And you can see, today again, I mean, after a few announcements that have happened, I think again the markets have been
a response, right?
Yes. So and given the levels at which we are, whether on the debt markets, equities, FX, I think all of these augur well. I mean, we should see flows coming back into our markets in a big way.